Hey everybody, I'm Stephen Kalayjian and welcome to Back to the Futures. I'm here every Tuesday and Thursday from 1:30 to 2. So today's theme of the show is the continuation of the uptrend. So since last Wednesday, we've been in a bullish trend on the 30 and 60-minute time frames on the underlying ETF, the spiders, and the QQQs. Now, you're looking at right now the diamonds and the IWMs. We're actually in sell mode on both the 30 and the 60-minute time frame. So the market's kind of mixed right here now. We have the S&P futures really strong here. The spiders are really bullish here on the 30 and 60-minute time frame, along with the NASDAQ, the QQQs. And one of the things I teach everybody along the way here is that when you're trading the markets, right, you want to be able to understand that you need to look at the underlying ETFs when you're trading the markets, right? And it's really important. Now, granted, we're really slow here, right? The volume, I mean, literally the S&Ps aren't even moving here. They just moved 3 points on one way and, it's not really moving. But what we really need to remember throughout the whole process of this is that you wait patiently. One of my 5 keywords is patience. And when you are patient, you're patient on the pattern, you're patient on the overall movement. And what you want to be able to do and recognize is that when you're trading, you want to be able to identify the patterns. Okay, so let's just look at the spiders right now here, the SPY. Okay, you can see the algorithm is negative right now on the 15-minute time frame. So if we close above the 603.96, so that's about 5 handles on the S&P. That means that the S&Ps need to close above the 63.64 level. And if we get that, then you're going to get a buy reversal on the 15-minute time frame. Now, when you get the buy reversal on the 15-minute time frame, it would then correlate with the 30 and then the 60-minute time frame, which is still bullish. Now, what we really need to remember and how to focus, okay, is that when you're trading, you want to have the right tools in front of you. And I could not trade without the indicators and my whole overall setup that spent nearly 10 years of my life building. Oil's been very bullish today here. Beautiful patterns. I got the buy reversals and then the pullback around the 120 time period. Oil ran about 70 cents. Great patterns. Now, when you're trading oil, what do you need to look at? You need to look at the underlying ETFs, the USOs, and they're beautiful. I tried to buy the USOs. I missed to buy a penny, and it just ran 20 cents, and there goes oil. I called the beautiful long in oil, and I'll show it to you all in a minute. But this is a magnificent pullback on oil on the USOs. It actually confirmed the move into the buy divergences, and it was just an absolute phenomenal pattern on the USOs on the 15-minute time frame. And you can see it here, and I'll just type up the USOs really quick because I got buy reversals on the underlying ETFs on the. Look at this beautiful pattern right there. That beautiful pattern right there on the USOs, that gave me the buy on oil with the range of 69.80 to 95. It got down to 83. There goes oil, just ran 17 cents just now. So again, without looking at the underlying ETFs, it's very difficult based upon my research to trade the continuous contracts during the US session. You want to trade oil during the Tokyo session, during the European session, not a problem. But during the US, there goes oil, boom, 18 cents on crude oil. Beautiful, beautiful move. So again, my research, and I've taught this to some of the top hedge fund managers in the world. And it's important to recognize that in order to trade, whether it's gold with the GLDs, if you want to trade the YM futures, you need the underlying DIA. If you want to trade the Russell, the IWM, the RTOIs, you need to have the IWMs, the S&Ps, the SPY, and the NASDAQ 100 futures. Then you got to look at the QQQs, right? But again, what we really need to maintain here, okay, is the understanding that when you're trading the market, you want to be able to give yourself the best put the best foot forward. And so, for example, if the spiders reverse to buy, on the 15-minute time frame right here, taking out that 0396, we're about 26 cents away. So basically, we're looking at the S&Ps roughly around the 63 and a half, 64 range. We close above that on a 15-minute time frame. Number one, the lows will be in for the day. Two, it will correlate with the 30 and the 60-minute time frame based upon my work. And then number three, we'll look to buy the next pullback on the 5-minute time frame. Magnificent pattern. Now, you may say, okay, here, I called two great longs this morning on the S&P. I had people in my live stream, okay, oh, we got to short them, we got to short them. Not me. I don't know what you're seeing, but I'm not shorting them. Okay, so the way my work, my research has shown me, let me just go here really quickly, and I'm going to just change the time frame really quickly to a 30-minute. You can see right here on this deep oversold condition on the 30-minute time frame, it was an absolute Picasso. It was an absolute Picasso in the sense that when you're trading the market, okay, I now realize that the 30 and the 60-minute time frame are in buy mode, okay? So when you got this 15-minute time frame to reverse the sell on indicator 4 on the 15, it just set up the long on the 30-minute time frame. Because remember, my conditions are off the 15-minute, the 15 to 30, and the hourly. So if 2 out of 3 are still bullish, I go with the long. In this case, the 30 and the 60-minute time frames were bullish. The 15 got oversold. I was buying S&Ps below the 48 and a half, 49 level, and they ripped. Both times they ripped. One, I think, got down to 47 and a half, and they ripped up to 55. The next push down around the 11:45, got down to 48 and a half, 48, and then boom, there it was. Now, with that being said, when the 15 reversed here, okay, most likely 85% of the time that the highs are in for the day, right? But in this situation here, currently, the deep oversold condition on the 15 set up the oversold condition on the 30-minute, and that's still intact, okay? Again, we're just going to see where it goes and how it goes from here, okay? Now, if the 15-minute time frame closes above the 603.96 right here, okay? If it closes above the 603.96 level, then we're going to look to buy the first pullback on the 5-minute time frame for a long. Now, look, it's like watching paint dry here, right? And what we really got to remember in this whole scope of all this is we want to be able to be in a situation that gives us the ability to trade the market effectively, okay? And when you're looking at the market, you need to look at the multiple time frames. You need to look at the 15, the 30, and the hourly time frames. And that's what my research has shown me. But more importantly, what we really want to do throughout the whole process here, okay, is we want to be able, okay, to identify the move, identify the pattern, identify the ability to take the trade on. So right now, I'm neutral right now. I'm waiting for a little bit more of a pullback on the S&Ps. Probably I would look to buy them here between the 53 and a quarter, 58 and a quarter range. And then I would probably from there, I would basically just look for long entries, even though the 15-minute time frame did not reverse to buy. So with that, what's in right now, we're going to be patient, waiting to see if the S&Ps can drop here. The 15-minute time frame on the S&P futures reversed to buy. But now what we want to do, we want to be able to see if we can get some type of a nice pullback here. Okay. What else? Looking at the Qs are up 9. The Nasdaq futures are up 9. So really, not a lot really going on here as well. If I bring up the QQQs, okay, again, you can see here the beautiful pullbacks on the 15-minute time frame. I mean, look at this last pullback on the 15-minute time frame. The Nasdaq futures ran north of 60 on that. okay, off the 15. One of the things I want to show you right here, okay, this is a monster sell divergence right here. Do you see you're making new highs right here above the 516 level on the QQQs? And when you get that big sell, you see you're making new highs, and the MACDs are non-confirming right here, right? So this is a classic short right there. This is a classic short, all right, on the Nasdaq futures, and that was around 12. So you're making new highs, okay? So we got the push down this morning here, okay, and then you got the push up here, then the pullback here. So again, it's the new high and the non-confirmation, and then you got the pullback here. This is the bounce at 11:15, all right, and then 12. See, so my research has shown me that you'll get anywhere between 4 to 6 great trades a day, okay, and on the time frames that you look at. So if it's a 15-minute, we're looking at 4 to 6 great trades. On a 5-minute, 4 to 6 great trades a day. On a continuous contract, I'll get anywhere from 8 to 12 great trades a day because there's more data and there's more things going on. Okay. Again, I stream every day from 9 to 4. If anybody wants to join me or you want to give me a call, my number is 914-500-7484. I just spoke to somebody just about an hour ago that actually came from the Tradier hub here, and is really learning futures in a really great way. And I told him, of course, I would help him in every way possible. One of the things that we need to understand is that there's a different way of trading. When you're trading futures, right? You need to understand how to use the execution platform, which I call a ladder. Some people call a matrix. And when you have the understanding of how to trade with the matrix, right, you need to be able to practice, right? So practice is everything. What you want to be able to do is look at the platform, get a practice account, a paper trading account, okay? And then what you want to do is you want to be able just to go click, 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 okay, and practice and learn how to scale in and scale out of positions. And I teach that during the day in my live stream. And it's what's important with that, okay, is you want to be able to understand how, when you're trading the markets, to be able to execute your orders as you're scaling in and scaling out of positions, okay? Really important to understand that. Very important to understand that. There goes oil on the 15-minute time frame. That was an absolute Picasso right there. So it's important to recognize a great platform. And Tradier's got not only a great front-end platform, but it also has a phenomenal front-end with a front-end platform, but also has phenomenal margin rates, okay, for micros and for the big ones. I believe it's $50 for micro and $500 for big E-mini contracts, okay? Again, what's really important to you, you need to have a firm that you have great technology and you have great margin rates and also great rates to trade. And that's what Tradier has. And I've known them for more than a decade. I'm really happy that they really got involved in the futures markets. It really is a testament to where they're going in the future. And like I said, I've known them for quite a while, and they're great guys. And I just want to see them explode. But more importantly, I want you to be consistent. You have someone with my trading experience over 41 years. 42 will be August 1st of 2025. Not a day that goes by, I have zero regrets. There goes oil. Beautiful. Oil just ran 20 cents just now. S&Ps are pulling in nicely here. Okay, this is off the continuous contract. But what we really want to do is to really hone in on the understanding of when we're trading the markets, you want to be able to scale in and scale out of positions. And when you scale in and scale out of positions, it's all primarily focused on what? It's primarily focused on the understanding and the ability to trade the market effectively. And when you're trading the market effectively, you want to be able to understand that it's important for you to be consistent, as consistent as possible, and that's really important. Okay, that's really important to be able to really take advantage of the price movement, take advantage of the trades, and take advantage of the great patterns that we have right in front of us. Okay, so as you're scaling into a position, you're building a position. As it's going in your favor, you're scaling out of a position, and that's important. That's important. Okay, that's important. Okay, so let's see here. What we really need to do here, okay, is to take advantage of the understanding of the markets, right? To where we're going and how we're going to be able to trade effectively. And so when you're trading the markets effectively, what you want to be able to do is take advantage of the correlations. Remember, I look at 5 conditions. I look at a condition called a trend, a buy reversal, a sell reversal, a correlation, and a disconnect. And when you have these conditions, right? When you have these conditions, it's important to understand and remember that as you're trading the market, right? As you look at this oil go, oh my God, oil just ran from 80, just ran almost 30 cents. As you're trading the market, you want to be able to be in a situation that will give you the best ability, okay, in understanding the markets. So using multiple time frames and using the underlying ETFs will really enhance your trading. Really enhance your trading. Okay, but again, it's all up to it's all up to taking advantage of these overall patterns. So right now, the 15-minute time frames, okay, have not reversed to buy. The 30 and 60 minutes have, okay. And what we're able to do here now is to now wait patiently, as I call this long here. Wow, oil just ran almost 30 cents here. Amazing. And what we want to be able to recognize, okay, is the next push up. If we get that push up after this long, I'll start exiting longs. But mostly what I'll do here, okay, is to be able to then take advantage, okay, of the next push up to exit longs and to see if that 63, 64 level on the S&P futures gets taken out. And then, boom, guess what? Then we'll be able to be in a better situation to identify if the spiders reverse to buy in the 15-minute time frame that correlates with the 30 and the 60. Then we'll look to buy the next pullback on the 15-minute time frame. Look at this oil. This oil just ran 30 cents. That's a monster move. And I would not have been able, yes, I see the continuous contract oversold, but that pattern on the USOs, that was a Picasso. That was the first pullback on the 15-minute time frame on the USOs that correlated with the 30 and the 60-minute time frame. You cannot ask for anything better than that. S&P futures, if you're long here, I would start selling longs 58 3/4 up to 60, 60 and a half, 61 range. All right. A monster move here on oil. And again, I've taught this to some of the top hedge fund managers in the world using the underlying ETFs when you're trading the continuous contracts. And so with that being said, it's all predicated on understanding which way the markets are going, which way the trend is. And I can see with my 2 eyes that pullback on the USO set up the long. Now, you may not want to trade the USOs, right? Okay. The USOs went from 87 up to 20, ran 37 cents, as did oil, ran about 37 cents. But the thing that you need to remember, okay, the thing that you need to remember is that when you're trading the market, you may not want to trade the underlying ETF, but if it helps you trade the continuous contract, there goes the S&Ps. Just ran 2 handles here. If that helps you, then guess what? I've done the research. I've done the work for you. I've given you that ability now to recognize that pattern right there was an absolute Picasso. An absolute Picasso that gave me the ability to recognize, guess what? I'm looking to buy oil on this pullback. That's a beautiful pattern. I wrote the map for this. I wrote the program, and the patterns repeat themselves. If anybody has any questions, please ask me, or you can text me at 914-500-7484. A little bit different look here. It's freezing. I was in New York. It was 24 degrees, and it's freezing here, 54 degrees in Florida. So until it starts getting warmer, or until I go to a Christmas party not this Friday, the following Friday, I'm not going to shave. I can't take the cold weather, okay? But if anybody has any questions, please text me. I do hold a live stream each and every day from 9 to 4. I teach, I guide, I explain, I go over the software that I help create. And it's important for each and every one of you to understand and understand the conditions in which how I'm able to teach each and every one of you. Okay. If anybody has any questions, please just let me know here. Let's see here. Let's see. What else? Okay. So the S&Ps just rallied 2.5 points here. Okay. Again, that was a nice move here, a really nice move here on the crude oil. Nothing really going on in gold. As a matter of fact, on gold, I have sell reversals on the 15, 30, and hourly charts. So really nothing going on in gold there. Let's see here. Very, very, very quiet. I have to say, very quiet. And, when it's this quiet, you say to yourself, you just say to yourself that you're very fortunate to be in a situation where you're able to, have the technology and be able to identify the moves in the market and being able to understand how these patterns work. It's just really amazing how, people it could change people's lives. And that's what I'm here to do, because my legacy depends on your success. And that's important, because for you to be able to be a successful trader, I am a mentor. I've traded, okay, nearly 2 billion, maybe 2 billion shares of my life. And it's important that when you're trading the markets, to be able to have someone who's actually pulled the trigger. God knows how many hundreds of thousands, millions of times I've done it potentially, right? But also give you the confidence, because someone has built now technology to give you the confidence. And you also have me as a mentor during the day, whether you're trading your own personal money or these funded account type scenarios. It doesn't make a difference to me, right? It doesn't make a difference. But what makes a difference is you being able, okay, to be successful. And that's all I really want. For each and every one of you to be successful, for each and every one of you to be able to be in a situation that is going to enhance your trading and enhance your life. Remember, if you can make $500 a day and you hit your goal, whatever your goal is, 200, 100, 500, but if you can make $500 a day, okay, that's $125,000 a year. Okay, it's $125,000 a year. But again, with that, I just want you all to know that I'm here if anybody has any questions. But more importantly, it's really important that you remember you got to be consistent. Being consistent is everything to be successful. When you hit your goal, you stop. Right? As I did when I first started trading, I stopped. And then what I did, boom, I went into then paper trading, or I studied the markets. I hit my goal. I was happy. I took money out of the market. Do you know how important that is when you can say I took money out of the market? It's just unbelievable, right? It's just unbelievable to recognize that, to identify that, right? And what's important is that when you're able to do that and you're consistent, there's no greater feeling in the world, right? There's no greater feeling in the world that when you're that consistent, right? Okay. Does anybody have any questions at all? Nope. Okay. All right. Again, let's see if we can look at here the GLDs here. The GL gold futures right now are negative here on the 30-minute. But a big buy reversal comes in around the 244.87. Let's go back to the spiders here right now. Okay, the spiders, you can see here, right here. Again, that 603.95 level, which is about 6 handles, 5.5 handles on the S&P. Again, S&Ps would need to take out the 63 level here. And so when you have numbers, mathematical numbers that can guide you and tell you exactly what's going to happen, right? Then it's a win-win, meaning it's a win-win in the sense that you can identify, okay, the mathematical number that's going to get a buy reversal, and then now the 15 will correlate with the 30 and the 60-minute time frame on the spiders. We'll look to buy the first pullback, which would mean on the pullback, we would be looking to buy the first pullback on the S&P futures, okay? I can't even tell you, 30 minutes goes like that. This is a great honor to be here representing the Tradier futures. And this gives me great joy to be here every Tuesday and Thursday from 1:30 to 2. But remember, anybody has any questions, if you don't want to ask questions here because you're bashful or whatever, you can always text me at 914-500-7484. It's important that you recognize that no question is ever stupid. Yes, I spent the entire night talking to half the country. All right. I took a day out. I returned everybody's call. I had so many to get back to in the last day or so that I decided, let me just take the next the 4, 5, 6 hours. And I was on the phone practically all night talking to people, trying to answer their questions, guide them, give them more insight in the ability to, in trading the markets the right way here. All right. What else? Okay. Oil again rallied nicely here. Beautiful. What else here? Let me see here. Okay, so again, we just got to wait patiently to see if we're going to get this push up. And other than that, it's been very, very quiet. But it's okay. We had some really great moves here today, everybody in our room did very well. And I asked each and every one of you to join me if that's something that potentially that could really enhance your trading. Again, whether you're trading your own money or you're doing these prop funded accounts.
We have a question, Steve.
Oh, where's the question? Sorry. I don't see a question. You say once you hit your goal, you stop. How far do you let yourself fail before you stop? That's a great question. Great question, Doug. So basically, when I traded, I started because I learned from someone. He said his goal was to make $100 a day. And when he hit the $100 a day, he stopped, right? And however, if he lost $100 a day, he stopped as well, right? So it's all predicated on your goals, right? So if you say to yourself, for the next week or two or a month, I'm going to hit my goal to make $100 a day, and then I'm going to stop, okay? And if you lose 100, you have to stop. It's preservation of capital. Because you can't go Monday, Tuesday, make 100, lose 500 on Wednesday, make 100 on Thursday, make 100 on Friday. You're down 100 for the week, right? So you just can't do that. It doesn't work. Anyway, I hope I answered your question. If you want to text me, Doug, 914-500-7484. Thank you for joining me, everybody. I'll see you here Thursday. Back to the Futures. God bless you and God bless the United States. Have a great day, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.